Hello! My, has it been a long time since I made a video? I am very much encouraged and my heart is warmed with the very lovely response from many of you in the comments below. Guys, I made like 2 videos like 4 months ago, mostly as a response to some other stuff, and so many of you have been very encouraging to make more. I have not really been trading since the tail end of the summer because I was busy with work and my health wasn't so great. So I don't know how many of you have read the Market Wizards books. They are really fantastic interviews with highly successful traders, people far more skilled and gifted than I am. But at the very beginning of the new Market Wizards book, there's this story the author tells about a time when he didn't want to be trading, but he just kind of wound up trading anyway, and he wound up, kind of losing all the gains he made because he just kind of kept making silly mistakes, really. And the moral of the story was that you don't have to be trading if you're not ready to trade, or you don't feel like you're in a good place, or you don't have capital that you can afford to lose, then just don't trade. It's okay. You don't have to trade. It can be very addictive, I think, for a lot of people. This idea is like every time the market moves, every time a bar goes up or down, people are like, oh my god, I gotta get on this. Like, I could have made money there if I'd bought there. Oh my god, it just went down. I could have made money if I sold there. And it's like, doesn't matter, just chill out, take a break. It's okay. You don't have to trade if you don't want to. And I will always just not trade if I don't want to be trading. It would be nice to be able to consistently make videos for you guys, I guess. Like, that could be kind of fun. But if I don't want to be trading, I won't be trading, and that has to be the most important thing. That being said, really, like every couple of days, it kind of seems to be, I get another comment on this, tiny little channel from people asking for a little bit more. And I have recently started trading again, and I took a trade on Friday that I felt was quite interesting. Ironically, the interesting trades are the losers because, you make mistakes and you can learn things from those mistakes. And, the trade kind of worked out at break even. So, I kind of got away with it with a bit of a free lesson. Well, kind of a reminder lesson for me, something I should really already know. But hey, I kind of thought the trade, maybe might be interesting for some of you guys. So let's take a look at it. So the trade was on the UK 100, not crypto, for all you crypto lovers. I also trade other things, indexes and forex markets as well. In fact, I'm actually more comfortable trading those things. I'm very interested in crypto, and I do kind of follow it a bit, mostly the bars rather than the news. But I'm certainly most at home and most practiced and most comfortable with forex and things like the DAX or the UK 100. But anyway, so I was looking at this market and I was like, man, we're just going down, lower lows, lower high, lower low, lower high, lower low, lower high. And then, so I kind of, where was it? I guess it would have been around here, I had this drawn in. No, I didn't have this drawn in. What did I have drawn in? Maybe we need to go forward a bit. I love TradingView recently introduced this replay tool. It's so good. I'm so happy with it. It's just so useful. Or maybe it was here. Okay, so we had this action. So like the idea behind these forks, if you don't know, is that if you get a good A, B, C pivot, see how these are kind of major, right? Like we're trending, we're swinging up and down in this way, and these are kind of some major extremes. Price, like 80% of the time, or thereabouts, will reach the median line, which is the center line. And if price does not reach that median line, then that gives you a very, like it's like a failure, and that gives you a very bearish piece of information. And it makes sense, right? Because we're trending down, and like, so we we get these swings. Let's just take a look. I'm not actually, I don't remember, but like I can kind of just see it after a while. See how like you get this pivot down here, the C pivot, and then price retraces to the median line. Like it happens all the time. Let's go the other way, so A, B, there's a pivot there. I'd say there, because that's where price began to move. Price pretty much reached it. This is pretty steep, so yeah, it's close enough. It didn't quite make it, but you can see how price is attracted to it, and it makes sense if you think about it kind of logically. Price gets makes a pivot high or low, and the opinion is that it's either too expensive or too cheap, so price will naturally kind of be drawn back to the kind of middle ground. So this is what this tool kind of captures. Anyway, so I guess I had that. I wasn't on the 15-minute at the time, but I just want to condense down the information a bit. Let me just take a quick look. Is this the fork I had in? Whoa. Yeah, I think it was. What's going on? Why are we all the way over here? What happened to my replay? Okay. Good to know. Changing the time mode kills the replay. That's a little bit unfortunate, but whatever. Okay, so we're replaying from here. Price has failed to reach the median line. I'm feeling very bearish, and I'm just watching for now. So let's just do this one by one manually. Come on, I wish this could go faster. So we're very bearish. We're making new lows now. The buyers can just not pull this up, right? So I'm feeling very comfortable looking for opportunities to sell this market because the trend is down. Why did we stop? Hello? This is too buggy. What's going on? Play? Stop. Play? Stop. Yeah, fine. Kill the replay. We'll just not use the replay tool, and we'll just actually just like look at it all. You can kind of do this, so that we don't get ahead of ourselves. So we're coming down, we're making new lows. I quite like this. I'm like, this is interesting, So we made a bit of a see how like here, let me pull this tool up. Yeah, black's fine. So we got people selling the market here. Yeah, we come down, we make a new low, then we come up, we make this high, and then we make a new low, right? So you can see the sellers are moving down. The sellers are selling at this price, 7,400, then they're selling at 73.95, then they're selling at 73.83. Like the sellers are moving down, all right? Makes sense, right? We're trending down. Now we make this kind of formation. People call this all sorts of different things. It's head and shoulders. It's a wash of these levels. It's whatever. But the point is just that we come down, we make this low, and then we come up and we bust. So sellers were selling here before. They're still trying to sell, but these sellers are no longer able to make a new low. So this starts to tell us that something's changed, right? You got these sellers here. You got these buyers here that are now finally taking out the sellers that have been stepping down. Okay, so over here you have buyers pushing it up, right? So these buyers, if they're buying here, a lot of these buyers here, they'll have a stop in here. Okay, and then when the buyer, so then you can see price comes down and buyers push it up again. Yeah, now they're holding. So you've got new buyers in here now, and they're buying the market at this price, and they've got stops under here. So you got stops all under here, yeah. And then price retraces a bit, and people buy it up again, and they push like new recent highs. So you've got stops following behind this. Like every time you have a new wave of people buying at this price, a lot of those people are putting their stops just kind of behind their order. And remember, they're buying the market. So for them to close their position, they have to sell it. So these are sell stops. These are just sell orders sitting in the market, right? And then we come over here. It'd be nice to have a bit more space than this. Maybe if I just kind of do it slowly. The replay feature won't break. Let's just put this like here. Yeah, okay, we're getting away with it. We're getting away with it. There we go. So you got sell stops being built up in here. Okay. So what is a sell stop? It's just an order to sell. Okay. You don't even need to look at the book. Like, you know, there are sell orders in here. So you got lots of sell orders coming along here. And then we've got this rip up, right? So the buyers push really high again. They're pushing up. We've wiped out the sellers that were here. Remember, the sellers have buy stops in here as well, right? The sellers here have buy stops like up around here. You can kind of look at this move and you can see that the sellers jumped on this again, but the buyers pushed it up. And see on this candle, the buyers like push it up here, and then you get this fast rip. Like, this could be a number of things. It doesn't really matter exactly what it was, but it could be sell, it could be buy stops in here, right? Like, you got sellers in here, and that when their stops are hit, a buy order is triggered to get them out of the market, and that's a buy order. So if you have loads of buy orders in here, they get triggered, I guess, around about here, and it, price rockets through because it gets like a boost of buy orders, right? It's these people's buy stops. It could also just be the fact that people are starting to identify that we're now actually making higher highs and breaking previous lower highs. And, so people will get excited and they buy the, so a lot of people are maybe starting to get interested, and the majority of the, like a bunch of traders are starting to think that price could be going on up. So then we get this, then we get this, then we get this, then we get this. I've been watching this come up, and then we get this, and I'm like, whoa, okay, now this is pretty interesting, because this bar takes out these stops. Yeah, so you got some stops. That's why I have this red box. Let me just highlight these things properly. This is my theme, So you have these sell stops in here, right? They're buying the market, so if they want to get out, they need to sell what they have, right? So these are just sell orders just sitting in the market to protect those traders. So price pokes through them all and wipes out these guys, right? And this tells me that although there are a lot of people starting to go long, right? We've been trending down for a while, and now these people are starting to buy it. They think, oh, maybe this is the bottom. Like, everybody's always trying to catch a falling knife. They're like, oh, you got to buy at the bottom of a downtrend. Yeah, this is great. This is great. You have loads of people that get excited by this, and they look at this and they're like, ooh, a little head and shoulders. Maybe we can buy. Maybe we can buy. So anyway, they get it up this high, but then sellers drive this down again, and the sellers break these buyers here. And this is pretty interesting, because now I'm thinking, okay, we are overall trending down. We've got a nice little pullback here where buyers got excited, but now those buyers are crying, right? We've got proof that sellers are still stronger than the buyers. With this bar, we have that proof, right? This bar is showing us that right now, the sellers are still in control. So this is great, right? But I don't want to sell the market right here. Like where am I going to put my stop? So I'm thinking, okay, well, I can maybe put my stop up here, something like this. Yeah, I can hide my stop, control my risk up here with these guys, somewhere around here. Yeah, well, we'll see what happens. I kind of like the idea of it being up here with these guys, right? But it's just a little bit too far. Like, that's just too far. So I'll just use this recent pivot to hide my stop behind, because there's people selling hard here. So those people selling hard, I want to sell with them, right? But I want to sell when I know they're there. So the idea is that I'm going to wait for price to maybe, this is not the tool I want. I'm going to wait for price to kind of come back somewhere in this zone, and then I can hide. Where's my risk reward thing? So if I put, then I can kind of put my stop up here somewhere, and I can, I can target like 3-to-1 or something for my take profit, right? Like I like to trade at 3-to-1 thereabouts risk reward. This means I can be wrong most of the time and like still make money over time. Like the idea of that is just it's so mind-blowing to me. I never get over it, you know? Like you can game it and you can manage yourself. You can manage your trading so that you can actually just be wrong most of the time and still make money. It's so cool. But anyway, so I was looking at this and I was like, this is fantastic. I like this. The sellers are in control. If price can come back enough, I will want to sell with them. But where's my target? And what I did was let me go forward a bit. So we consolidated a bit down here. And then I think we came up a bit. Yeah. Okay. So I pulled a line, something like this. And then I said, okay, well, if this is the line I'm using, and I liked how we were on it, then this is our action, right? If you look up the Dr. Alan Andrews action reaction course, man, the information in there is phenomenal. It's pretty old, but my God, I love that man's course. He's the guy which built the fork. Like this is called an Andrews pitchfork. It's all his stuff, you know. It's not me. Anyway, so let's get rid of this and rid of that. And anyway, so this is part of his course. He talks about action reaction. So we have this action, yeah, and then the reaction. Ooh, on order. There we go. I want something like this, but let's make it equidistance. So that's that far action. So reaction is somewhere like this. Yeah. So I've drawn in this. I'm like, okay, well, like, you know, I want to sell around here. I'll maybe like cheap that stuff up a bit, minimize it as much as possible. I may be selling to like down there. 3.57. That's pretty much what I was looking for. I think it was 3.6 something. Maybe one more pip. Are we still on 5.7? Yeah, 3.64. I guess that's what I had drawn in. Now, this is the mistake. Right here is where I'm making the mistake because I'm trading a line. Like, what is this line? This is just a line. The market does not care or know what lines I've drawn in. It does not care in the least. But I've now drawn in this line. I'm like, yeah, I need my 3-to-1. I get it on this line. So I'm going to use this line. But like, what is that? That's meaningless. This is rubbish. Like, I should know better than this. But this is what most people do. Like, people love to draw in a line. They're like, okay, I've got my line. Why didn't price care about my line? Like, I had this line. Why didn't price bounce off it or something? You know, it's like the market does not care what you've drawn on your screen. We draw lines. We draw things on the chart to describe what price is doing, to describe where people are buying, where people are selling, to define patterns that we find in price. We do not draw lines so that price will bounce off them. This is ludicrous, right? But so many people think that way. When you say it out loud, it's like, what the hell? But it's such an easy trap to fall into. So here I am. I've drawn in my line. And I'm like, yeah, there we go. I got a target. But like, where is this target? And I was uncomfortable at the time. At the time, I was like, we're trending down. It should be fine. You know, completely disregarding the fact that we've made something of a noticeable low. Like here, we know that people bought the market. Okay, we know fact. There are buyers here. And these buyers broke these sellers before, right? So I'm like, these sellers are going to help me break these buyers. And this is a little bit silly. So, but I decide to just, it's fine. We're trending down. It'll be okay, and I ignore what I should know is that we do not just trade the line. We trade price action, right? Like these bars are telling me what buyers and sellers are doing at each bar. And that information is what I trade. Like I can know that information. I cannot know, this line tells me nothing. Like, what is this line? It's just like, well, we went this far away from this action line, well, from the center line, so this is our action. So we maybe get a reaction like this, and we're trending down, so it should work out. Like, this is kind of newbie thinking, you know. Again, like, I've not been trading for a couple of months, so, you know, I'll allow myself a few mistakes. Anyway, so we come up. Now I'm thinking, oh, like I'm not short yet, right? Like, I'm waiting for price to kind of come up high enough so that I can get a cheap enough entry, right? Like, I don't want to sell here. Price has already moved all the way for the move, you know, like half the way. So I'm waiting. It's getting late in this time zone, and, you know, I kind of think, should I just close the trade, or should I just like leave it on? I go to bed pretty early, and I decide to leave it on, and trade gets triggered somewhere. Where does the trade get triggered? I'll recognize the price action when we get it. Yeah, in here. Price gets triggered in here. And sure enough, these sellers up here, yeah, I have in my gray extended box thing. These sellers, there are sellers here. We know this from this. And sure enough, these sellers drive price down eventually. Or was it this one? I don't know. I'd have to actually like open my trade journal and find out the exact levels. But it's pretty much like whether my order was triggered here or here, it doesn't really matter. The point is that there are sellers in this block. You know, like there was a battle here, buying and selling, and it caused this tiny little bit of consolidation, and then sellers went pow, and it came down, right? So we know there's decent sellers in here, and sure enough, those guys show up again. We get this. I'm like, great, fantastic. What am I talking about? Because I set up the trade the previous day on the Thursday, and on the Friday I was following it. So on the Friday we were like, where were we? We were like, yeah, this is the candle. So on the Friday we were like here. I was waiting for it to open. It's around 2:30 p.m. You know, I'm waiting all morning. I'm at work. I'm waiting for it to open to see what happens. You know, it opens down. I'm like, great. You know, people are still selling this. So, you know, down it comes. I've forgotten about my concerns about using this line. I'm like, yeah, you know, the trade's in the green, so that's great. And I'm like, okay, well, hopefully this is not a kiss of this line, you know, like hopefully it's just coming up to test this, make sure the sellers are still there. And then we get this, and I'm like, fantastic, because now I can pull my stop all the way down to behind these guys, right? So these guys sold, we came up, and then the sellers sold it even harder. So now I can make my trade break even. And I'm like, yes, I can, it's now risk-free. Fantastic, right? Like, this is pretty, really happy to be able to move my trade to break even. So then we come down. Now notice, okay, before we get this far, I went too far. So we're down here now, and I'm watching every one of these bars, and I'm like, oh, I don't like this. This looks bullish to me. And sure enough, like, look where this is. This is like at a double bottom, right? Like, this is, like, there were buyers here before, and so I'm watching all this. Like, I'm watching every one of these bars. I'm like, should I just close my trade? It's like 2.5% or whatever. Oh, well, let me put my, you know, like because I risk 1% on my capital. If we, can we make this work? The risk reward was not 3 to there, so I must have been something more like, oh, of course, this is not high enough. So I was looking at this. Oh man, what was it? Something like this, right? And I was like, it's 2.5% capital growth, right? On my capital, right? For my trading account. And I'm like, oh, I really should be looking for, 3 or better. There we go. It was something like this. And, I wanted, so it's up here, it's around 2.4%. capital growth or whatever. And I'm like, nah, man, I want my 3.6% target. And of course, the buyers here sent it all the way up, closed me out at, you know, pretty much break even. And then I was out the trade, you know, in fact, it did actually poke out where my stop would have been. Right. So my move to break even was a good choice, right? Like we got, you know, I had a reason to move my stop there. So I think that was a good choice. But the major lesson, the major fault to identify is the fact that I was trading the line. I can see off to the left here that there are major buyers. I could quite happily, like before I entered the trade, I decided to trade the line. When price was down here, I was uncomfortable with it because I was aware that there were buyers here, but I was greedy. I wanted my 3.6% account growth. So I just came up with excuses to trade this line. And this is silly, you know, like I could quite happily have taken, in fact, from the get-go, I should have been looking to the left and deciding that this is the safest place to exit a short because there were buyers here before. Looking for new lows is like that's a tall order, you know, like you're asking a lot, especially just off these sellers, you know, like these sellers, please take me to new lows. Like, yeah, we've been trending down, you know, it happens all the time. Please give it to me. I don't know that. I'm just, you know, like that's just trading on a hope and a dream. But I know there are buyers here and I know there are sellers here. So when we came up here, you know, it's like I can realistically look to, I can relatively safely think about there were sellers here. These sellers can probably carry me into where the buyers were before. Like those buyers might defeat those sellers, right? But if I only look to exit around here, then I don't need to kill these buyers. You know what I mean? To ask these sellers to break those sellers is asking for a big fight and then for them to win that next fight as well. So, you know, well, I didn't lose anything on the trade, but you know, I did kind of grin to myself. I was like, Dave, you know better than this. Like, this is exactly what you used to do back in your newbie days, and this is just a nonsense. You know, we don't trade the lines. We trade price action. You know, like there were buyers here. That's a fact. I know there were buyers there. There were sellers here. I know that. You know, like I have no idea what's down here. I've got no information. It tells me nothing. You know, I've drawn a line. Like, what is this line? You know, okay, it's equidistant to this. That you often see these kind of patterns, but still, the market does not care what I've drawn on my screen. It doesn't even know, and if it did, it wouldn't care. So, the moral of the story really is just don't trade your lines. Trade what you see in the market. And hey, if you don't want to trade, don't trade. It's okay. You don't have to trade all the time. Anyway, so I'll leave it at that. I don't know if hopefully that was perhaps interesting for some of you. I guess like before, like, subscribe, comment, tell me what you want. Quite happy to kind of respond to what you guys tell me you want. You know, I'm not in any way interested whatsoever in providing any kind of tipping service, but talking about understanding how markets work and how price moves and stuff like that, you know, it's fascinating to me. I really love it. It's a lot of fun. So that's it. Have a good day, guys.